Hey guys, Mike here. So another jam-packed video for you. And if you didn't know, Tesla just reported earnings. So we're going to get into that, all the key metrics. Netflix, oh boy, we're going to talk about that one, what a recovery that was. Get into the charts. I'm going to spend a little more time on semiconductors, just to let you have a little info on that. And then I'm going to answer some questions. I asked you guys if you wanted to ask a few, put them in the last video. I'll try to get through, picked out at least 3 of them. There was quite a few. And I appreciate you guys who submitted those. And I'll try to answer those as quick as possible at the end. Feel free to submit some more. And I can't get them to the very next video. I'll try to get to them because some of these I have to find the answers to, right? Or at least try. And if I don't know, I'll just tell you I don't know. Now, right out of the gates, man, I noticed the members yesterday on Netflix. And I know put callers were absolutely celebrating last night when they saw this thing drop 11%. And they're like, oh boy, oh boy, oh boy. And then what happened? Oh my goodness. This thing actually went green at one point in time. It did finally drop about 1.5% at open. Went down 3, I think, for the whole day. So if you were one of those put buyers and you had to ride this thing out, let me know how you're feeling in the comments. Obviously, you bought calls. They got destroyed. But what I told members was, remember, it was all about subscribers, right? For as long as I can remember. All of a sudden, the subscriber count was disastrous. But then they went and wanted to hear about free cash flow, operating margins, how much money is being spent on this content, are we cutting down on that? That's what it, and remember I told you, I said you have to figure out, one, how they digest the earnings, right? Because when I started the video yesterday, it was down 11. In the middle, I told you, oh, look, it's back up to only down 5 now. But you have to look at how the market's done digested and what they're looking to hold on to. Because every earnings season so far, they've come up with something different. Oh, it's this time. Oh, okay, well, that's terrible. Well, what about this? This is okay, right? And so that's what you have to look for. So going forward for Netflix, it probably is not about the subscriber count anymore, okay? And at least for now, that's what they want to tell you. Now, Tesla down about only 3% in after hours, which is nothing for Tesla. But understand, I'm going to look at this with honestly, an independent view, okay? I know some people are Tesla haters, some people are Tesla lovers. I don't own the car. I don't love any company, okay? Nor do I hate, well, actually I do hate a few companies, but this ain't one of them. But if you look at the metrics, here you got vehicle deliveries still going up slightly, but you can see it is slowing down, okay? You got operating cash flow. This was, and free cash flow. This is actually really bad this quarter, but you can see last 3 reports, that's going down, okay? And so let's just be objective about this. And you can see on this right here, net income, adjusted EBITDA, again, this time's down, right? It was up, right? Doing a good job, okay? But now that's started to maybe trend down. We'll have to wait till next quarter. Actually, I'd say 2 more quarters to see what's going to be happening there. And then, of course, looking at the operating margins, came in 11.4%. This is what everybody was waiting on, right? And, of course, the expected was 12.1%. More importantly, it's down from 19.2% in the year earlier period, okay? Then revenue, $23.3 billion. It's in line, 23.6, up 25% from last year's first quarter. That's good. Net profit, $2.5 billion, $2.57 billion, so that's in line. Down around 22% from the year earlier. And so that's reflecting these price cuts, which again came out this morning. It's like every 3 days or something, there's price cuts, okay? I told my wife, I was like, man, I don't even want a Tesla, but I mean, these prices and everything, you're like, wow. All right, then, it's almost like they're trying to give them away here, right? And so they went down again in the price. Just in case you want a Tesla, make sure you look at it now, especially with that tax credit and everything. And I thought this was interesting. When you look at this chart of Tesla here, and we just add lines to it, I mean, they build solar roofs. I mean, this looks just like a roof, right? I mean, you see it move up and then perfectly down. And the question is, are we going to head out to this outer trend line right here and maybe break out of it, right? That would give my third touch, which I'm actually looking for right now. Or we're going to start heading down, bounce off the middle line, which we've done a couple of times, or head down to the bottom, which a lot of people would love because they really start buying hard, right? So, something to think about. But again, only down 3%. Wait till Elon speaks. Now, if you didn't know, one thing that helps and hurts Tesla is the fact it's the number 2 most shortest stock in the country behind Apple, and then Microsoft is number 3. This is why it has these huge run-ups, like from 100 to 200, right? So fast because it's so heavily shorted. And then, of course, it gets beaten down as well because it is a heavily shorted stock. So it goes both ways there. And before we continue, guys, if you're getting anything out of this, please hit that like and subscribe button. Think about sharing the video with your friends and family. And if you're new here and you like the content, please hit that subscribe button. I really appreciate it. I do work hard on this content for you, and it really does help me with that great YouTube algorithm. Appreciate it, guys. Now that leads us into the charts, and I cleared my S&P chart off. I just left the gap above and the weekly expected move. What bulls want, doesn't have to happen this week, but it would be nice if it was before the end of April. You want to get above the February high of 418. Obviously, why? Because then you would have December's high right there, then a higher high in February, and then we're going to the next higher high. So this will be extremely bullish, and most likely we'll fill that gap right there above, and then it'll of course put the 430 in range going back to August. And so again, the bulls are still in control right here. Okay, they don't want to lose 410 as really the area they don't want to lose right now, and so they're going to scrap that one out. And I don't have my normal supply and demand up here because I want to clear everything out for you. But if we look right here, you can see we're still sitting in that supply area between 412, 415, and I put it out every single morning about how this is a hard area to get through. But the big thing you don't want to have happen here is a bunch of gaps left behind on the move up. And they've done a decent job. You got one gap there, and then there's a big gap right here. All the other gaps are good to go. Usually gaps down in the morning, it gaps up, and then it'll fill the gap, right? We're getting these V recoveries throughout the day, but those are two gaps that were left behind. 90% of gaps filled. That's why it's a big thing. You don't want a lot of that happening. Now, if you go onto the Qs, it has not done as good a job as the SPY has, okay? Again, this is either accumulation or distribution, right? Coiling up for something, a move up, move down, it's sitting right there. I mean, it's done absolutely nothing since March 31st, basically. Now, if we switch over to the hourly, you can see you got a gap down below it, right there. If we keep moving down, you see another gap. You see another gap, right? And that's a pretty nice sized gap right there. And those are a lot closer than what you saw in the SPY, right? The SPYs were way down. The Qs are right there. And so those are going to be much more easily filled. And you can see it with these earnings we're having right now, that they aren't exactly, meeting expectations, so to speak. And this is the first quarter, which I've said, record saying is going to be better than the second quarter. And again, that's just my thoughts. Now, Meta been showing weakness, right? People have been taking profits, sitting right at this trend line. So for me, I'm expecting a short-term bounce. The reason why I'm expecting a short-term bounce doesn't mean it's going to happen, because it's right at that trend line. But if we look at the shorter time frame, what happened here? The trend line and the weekly bottom part of the expected move happened at the same time, and it bounced, right? And so that's why I'm not going to be surprised to see a short-term bounce. Again, you got that gap above it and stuff like that. It was pretty far above it, but I'm not going to be surprised at all to see that. Again, there's still the big gap below. And one thing you can look at here, if we draw this, we'll say, oh, okay, it's a rising wedge, right? And so will it break down from this? We'll have to see. Right now, the market, you got to think about it. Once people saw Netflix earnings and then we see Tesla earnings, we're going to see how they digest that. Now, right now, the big boys aren't starting off, really hot right now. But again, what is everybody waiting for? Apple, Microsoft, all of those stocks, okay? And so, we'll see if it shows weakness. I expect a short-term bounce, right? And so, NVIDIA, this leads me to semiconductors. NVIDIA, I know somebody was saying they were shorting this last night. Again, it just keeps powering up, right? It will not surprise me to get a short-term pullback on this, because it is at the weekly expected range max. You can see it's right there all day. I was like, do we go above it, below it? Normally, you'll get a pullback, okay, when that happens sometimes, and not all the time. But they end within that range about 70% of the time. Now, when you look at this right here, you can see, even on the hourly, it's not overbought, right? And this is one of those stocks that can absolutely be overbought. What amazes me is when you look at the volume. Look at the run-up right there, look at the volume, and then look at now, where, again, this is either accumulation or distribution, right? And so there is that big gap down below. Keep that in mind. And I know people, they're like, oh, yeah, I really want to short this thing. It looks prime for it. And it does, right? I mean, when you look at the valuations, right now, you got the Philadelphia Stock Exchange Semiconductor Index. It is getting very close to reaching what we did in 2020, all right, which we all agree was a bubble, okay? It got popped just like a bubble, and we're almost back there, right? And that's kind of, I know, put down in the comments if you're surprised to see that. But again, these are cyclical, and so that was, of course, everything was cyclical in 2020. Everything was going up. But, when you look at these valuations, it's amazing, right? You look at NVIDIA, 25.3 price of sales, PE of 156, all right? When you compare that to others, again, we're going to get to hear, I'll go over earnings in a minute, but Taiwan Semiconductors we'll get to hear tomorrow, which is the granddaddy of them all. And when you look at Taiwan Semiconductors, and we scroll down to the valuation, you're looking at a 13 PE ratio and price of sales of 5.8, all right? When you go up to, let's just pick another one here. We'll do MU, for example, and I'm just picking these out here. These are some of the most popular ones. But, we pulled this one down, got the valuation, and, PE of 42, and then a price of sales sitting at around 2.9. All right, again, NVIDIA, 25, price to sales, 100 and what did I say, 45 or some crazy mess, PE, right? And I do want to ask, if somebody had mentioned this in the comments last night, is this still in effect right here? Because I couldn't find anything different, where it says U.S. regulators last year put in place rules that stop NVIDIA from selling its two most advanced chips, the A100 and the newer H100, to Chinese customers, citing national security concerns. Please put your answer in the comments. Again, I didn't find anything else about that, but if that's the case, the reason why I bring that up is because, remember, China is the second biggest economy. This is a publicly traded company. Revenue matters, right? And, if you got a lemonade stand and I said, nope, you can't sell to your second biggest customer, which is really big, and the other person can sell to the two biggest customers, right? They don't have to worry about that. Who's going to make a lot more revenue and whose stock price should go up and actually make sense of the valuation, right? And so, for example, what is it? Apple, for example, 86 billion, I believe it was last time they reported coming out of China. I think Tesla, and I'm just trying to memorize it, come off the top of my head, it's like almost 20 billion or something out of China. And so that's an important market to be in if you want to make money. You can sell to all the other small countries you want to. But I'm just saying, so that's why I want to know, because that, to me, if they're not allowed to sell to China like that, then yeah, that's an even bigger problem, because China, I don't know how many years it is, and they ain't very far out, will be the number one biggest economy. So just keep that in mind. Now, earnings, and then I'm going to get to your questions. Obviously, you see what we've already been through. Tomorrow, Taiwan Semiconductor. Everybody's going to be listening to this one for a lot of reasons, okay? American Express, how are we spending, defaults, things like that. D.R. Horton, remember, seems like real estate has been on a tear. It's more of a seasonal thing, I think. But anyway, CSX, are they seeing slowdowns or not in freight and stuff? That'll kind of let us know what's going on in the economy as well. So keep that in mind. Then you got economic reports. These are going to be big, all about the jobs. And yes, this will absolutely move markets. Philadelphia Fed manufacturing. People like this one better than the Empire manufacturing, because Philly is a big manufacturing and industrial area. And so I think people are going to take this one more serious, because there was a big pop in the other one. Let's see if we get the same thing in the Philly one, okay? Natural gas, if you're big into that, you're going to get to see that. And so that leads me to your questions, and I'll get through these as quickly as possible, okay? And so I know it was, let me see here, Brian, all right? He said, what's the biggest risk to the market? Now, again, this is not financial advice. None of this. This is just from research and everything else. And then there's a lot of risk, right? What's the biggest? He was like, is it banks, liquidity, even, I think, China or something put on here. But, the biggest thing to me is the banks have kind of been taken off the table, because what happened when two banks started to go under? The Fed backstopped quickly. When another started going to Europe, European banks stepped in quickly. And so I think Warren Buffett said it best. Will there be other bank failures? Yes, most likely, if rates stay high like they are. Will depositors lose money? Not any better than 250K, because that's guaranteed, right? And so, and it seems like the Fed's going to step in either way and back everybody, right? So now the banks have took out hundreds of billions of dollars to backstop these deposits. So to me, probably the biggest one, some kind of credit crisis of some kind, if that happens, if banks keep tightening, or liquidity, right? If banks keep tightening and small businesses, which make up the majority of the country, cannot, keep their businesses going, and you start to see those bankrupts continue, and then we go into a recession, and an actual recession, then yeah, to me, that is the biggest risk, right? But right now, again, what are we in? The craziest market and economy we've ever seen right now. Even when you don't think people can keep spending, everything is still sold out, all right? That's just where we're at because of this crazy job market. I told you the other day when I told you about those labor laws being decreased, now 14 and 15-year-olds in one of the states don't even need a work permit, don't need their parents' permission, any of it, right? And so, when we're trying to roll in the 14 and 15-year-olds, make it easier for them to get jobs, they let you know you're in a very tight labor market. And these are states that are more industrial, not services, right? And Mike was talking about the VIX. He said, can you talk about VIX strategy and things like that? I'm just going to say this right here, because I did a video on this yesterday for the members, and I'll show you a chart. Some people plot the VIX themselves. This is the VIX divided by the VIX 3-month average. And if you look right here, there's these ranges at the top I got shaded and at the bottom, right? And so it's getting pretty good at picking out tops and bottoms so far, and this will always change, and I'll elaborate that in a minute. But if you look, the S&P is below it right there, and let me try to get this lined up where you can actually make sense of it. But you can see right there, when it down at the bottom, it got in that range right there, the VIX and slash divided by the 3-month VIX average. S&P topped out. You see right there, it topped out again. You see right there, it topped out again. And now, I did the video yesterday, we weren't in this range. Now, all of a sudden, we're in the range, right? So now we get to see, are we going to basically top out and start selling off before we get to the February highs and get a chance to break them and actually turn that into support or not? And so that's what we got to figure out. And there's no guarantee, and the reason why, it will always change. These ranges will always change. If you look at where the VIX used to be, you know, before 2020 or something, it was settling, what, 14 to 15, somewhere in there. Before that, you can get down to 12, 13. And so last year it was basically you buy stocks if it gets above 30, you sell stocks if it gets, 18, I think it was, or something like that. And you play that all last year. So every year is going to change. Every situation is going to change for that when you're figuring out strategies, if you're using the VIX, that is. And so you can do the same thing when you're, selling and, selling calls, selling cover calls, buying cash or selling cash secured puts and all that good stuff too. And so just think about it that way. But that's just a chart I'm going to keep track of for the members and stuff and let them know. And we went through a lot of that stuff yesterday, so you kind of get an idea what kind of videos I create for them. And somebody else asked me, and I'm going to tell you now, I don't know the answer to this, is does China have a banking crisis? The only thing I know about China, as far as I know, they control their banks. I believe they're state-run. So when they say lend, the banks go, yes, sir, and they lend, right? And they can cover their stuff up a lot more than we can because they control the banks. As far as I know, they aren't all publicly traded or anything, but it's China. So it's a lot different than here, right? And so, we would have thought by now the real estate industry would have brought them down, and you ain't heard anything about that, have you? Nothing. Right. And so, but over here, all of a sudden, the commercial real estate business, especially office space, is like the canary in the coal mine or something. Right. And that could be obviously also be a threat to the market as well. But we'll have to see. I mean, I don't know a whole lot about commercial real estate and office space. I've never done research on it. But I do know there's a whole lot of empty office buildings. And I know some companies just defaulted on another office building worth millions and millions of dollars. And so that's something we got to keep an eye on as well. But when you're sitting in these kind of environments where, it's high rates, liquidity is going to be tight coming from these banks and stuff like that. And I'll touch a little bit on that tomorrow when we talk about the beige book. This is what the Fed looks at. It's printed 8 times a year. It gives them, it tells them what's going on in the districts and each sector of the country as far as the finances are concerned. And we'll talk about that because some of them did report and stuff. So, but in order to keep this video less than 20 minutes, I will touch on that tomorrow with you, which is a whole bunch of other data I left out today's video. So anyway, if you got something out of it, please hit the like and subscribe button. Let me know what you think in the comments about Netflix and Tesla earnings, and what do you think tech going forward is going to be looking like as far as earnings and stuff. And are you expecting Q1 to be better than Q2 or to actually be worse than Q2? That's my question. I think Q2 is going to be worse, but that's just me. So anyway, hope you guys have a good one. Appreciate you watching, and I will see you tomorrow.